Hello, everyone, and welcome back to English Podcast. My name is David.
And my name is Natasha. Today we have an upper intermediate English lesson, and our topic today is money.
That's right. More specifically, we are going to talk about the stock market. This is a very interesting topic, and it is also very current because stock markets around the world are not doing very well right now.
Exactly. You may have seen a lot of news about this on television or online. So today we want to explain some common words, phrases, and expressions that people often hear when talking about the stock market.
But first, there are a couple of important indicators, actually acronyms, that you should know. You will hear these words very often in news reports. So let's look at them in today's vocabulary preview.
Vocabulary preview. All right. The first word in today's vocabulary preview is NASDAQ.
NASDAQ, spelled N-A-S-D-A-Q. This is basically one of the main American stock markets.
That's right. NASDAQ is an acronym. The full name is very long, so we won't explain it here. But in simple terms, it is a place where companies buy and sell stocks.
Exactly. Many publicly traded companies that sell shares to the public, trade their stocks on NASDAQ.
Now let's look at the next term. The second important word is the Dow Jones Indicator.
The Dow Jones Indicator tells us how well major companies are performing.
Right. If the Dow Jones goes down, people usually think the economy is not doing well. If it goes up, people feel more confident and think the economy is improving.
That's correct. The Dow Jones is based on some of the biggest publicly traded companies in the United States. These companies come from different industries such as manufacturing, technology, and healthcare. Overall, the Dow Jones gives us a general picture of how the market is doing.
Great. Now let's listen to today's dialogue and see how these words are used in real conversation. After that, we'll come back and explain what is happening.
All right, we're back.
Dialogue.
There were many interesting words in that dialogue. However, a lot of those words are very specific to banking and the stock market, so they might feel a little difficult. So now, let's take some time to look at a few important words more carefully in today's language takeaway. Language takeaway. Okay, the first word we're going to talk about is a very important word in banking and finance. This word is portfolio. Portfolio. Right. A portfolio is basically everything that you own as investments. For example, in the stock market, your portfolio can include stocks, bonds, mutual funds, other investments. So instead of talking about each investment separately, we group them together and call them a portfolio. Exactly. And this word is not only used in finance. For example, if you are a company, your product portfolio means all the products your company sells. That's right. Now, in today's dialogue, the speaker says, our portfolio is worth half of what it was a week ago. What does that mean? It means they lost half of their money. All their investments are part of one portfolio, and now that portfolio is worth much less than before. So when people say my portfolio is down, they mean they lost money on their investments. Exactly. Now let's move on to two very common stock market expressions, bull market and bear market. So what did these terms mean? Well, a bull is an animal with horns, and a bear is another animal. But of course, we are not talking about animals here. Right, these are special expressions used in finance. A bull market describes a market that is growing quickly, strong, doing very well. In a bull market, prices keep going up and people feel confident about investing. For example, people often talk about China having a bull market because its economy has been growing very fast. On the other hand, a bear market is very different. A bear market is slow, weak, not growing much. In a bear market, prices fall and people are more careful about investing. Think about a bear.
A bear sleeps for a long time during hibernation. In the same way, a bear market feels like the economy is sleeping and not moving much. So if a market slows down like the US market did last year, we call that a bear market. Very good. Now let's talk about the portfolio again. In the dialogue, the speaker says that the company still has some bonds. He says, "You still have some high-yield trash bonds and government bonds." So what does that mean? First, let's talk about the word yield. Yield means how much you get from something. For example, if an orange tree produces 300 oranges in 1 year, we can say this tree yields 300 oranges per year. That's right. Yield is simply the result or return you receive. So when we say high yield, it means it gives a lot of return. It can make you a lot of money. Now let's talk about bonds. A bond is a kind of promise. When you buy a bond, you're lending money to someone, usually a company or a government. They promise to pay you back later and give you interest. However, not all bonds are safe. A trash bond, also called a junk bond, is very risky. It means the seller might not be financially strong, and there's a chance they may not pay you back. So trash bonds are dangerous, but they can also offer high rewards. That's why we say high-yield trash bonds. It means you might make a lot of money, but you could also lose it. So it's a high-risk, high-reward investment. So these trash bonds are not very dependable. Exactly, that means they are risky. Of course, and because they are risky, they usually give more yield or more return. Right, so that's why we call them high-yield trash bonds. You might make a lot of money, but you could also lose it. Now let's look at the next word. They say these bonds will give us liquidity to cut our losses. So what does liquidity mean? Liquidity is a very common word in finance. Exactly. For example, in a company, the accountant might talk about liquidity. It simply means having cash available. So liquidity means you have money in hand, you can pay bills, you can buy things immediately. Right, this is not money borrowed with credit, it is real available cash. Okay, so liquidity means the money is available and easy to use. Exactly, that's liquidity. Now, finally, what are they going to do next? They say, let's think outside the box. We could reinvest in emerging markets. Emerging markets are a very popular topic these days. The verb to emerge means to come up, or to rise, or to appear. Right, so emerging markets are new or growing markets. These are places where the economy is developing quickly but is not fully established yet. For example, Southeast Asian markets are emerging markets because they are growing fast. West African markets can also be considered emerging markets. These markets are new, exciting, growing, not yet old or fully stable. So an emerging market is a market that is coming up and developing. So as you can see, there are many interesting words and expressions here, all related to finance and investing. Now, let's move on and look at two key phrases in today's Fluency Builder. Fluency Builder. The first phrase is something we have heard a lot in recent years, especially when the global economy is not doing well. The phrase is to cut our losses. So what does cut our losses mean? It means stop losing more money. Accept the loss. Stop the situation early. For example, if a business is failing, the owner might say, I'm going to cut my losses, sell the business, and start again. Exactly. You accept that the money is gone, you stop the problem, and you move on. So to cut your losses means stop what you are doing, sell or quit, prevent losing even more money. Now let's look at the second phrase, to think outside the box. This is a very common phrase, especially in business meetings or at work.
In the dialogue, they lost a lot of money. The economy is bad and the old way of doing things is not working anymore. So someone says, let's think outside the box. What does that mean? It means be creative. Try new ideas. Find different solutions. Exactly. Instead of doing things the same way again and again, you try something new. This phrase is very widely used in business, education, and problem solving. When someone tells you to think
So,
outside the
thinking
box, they are
outside the
asking you to
box
be
also
creative,
means maybe
explore
breaking
new
some of the
ideas,
rules.
find better results.
Right. It means don't always think the same way. Don't do the same thing again and again. Try something new. Be creative. Come up with a better idea. That is what thinking outside the box means. Exactly. Very good. We've learned a lot of useful words and phrases today. Now, let's listen to the dialogue one last time, and after that, we'll talk a little more about this very interesting topic. Dialogue. Final listen. Sorry to bother you, sir, but I have some bad news. What is it? Well, the stock market has dropped sharply and we've lost a lot of money. What do you mean? What happened? There are many reasons, but Nasdaq is down 200 points. The Dow Jones indicator also went down. Our portfolio is now worth only half of what it was 1 week ago. How is this possible? You were supposed to talk to our stockbrokers and make sure our investments are safe and profitable. I know, sir. We didn't expect a bull market to suddenly turn into a bear market. However, you still have some high-yield trash bonds and government bonds. These give us enough liquidity to cut our losses and reinvest in emerging markets. We may be able to turn this bad situation into an opportunity and think outside the box. Do what you have to do, but one more thing. Don't tell the other stockholders. If they find out, the company could collapse. Final discussion. You know, I remember when I was a little kid watching TV with my parents. On the news, there was always a business segment. They would say things like, Nasdaq is down 10 points today. The Dow Jones Industrial Average is down 10 points. Yesterday, it was up 2 points. At that time, it all sounded very confusing. Yeah, exactly. It's still complicated today. If you look at newspapers or financial websites, you see lists of companies with many numbers. It's actually a very interesting topic. Some people even say the stock market is almost like a science. It really is a science. Some people have made a lot of money by what we call playing the stock market. They try to buy stocks when prices are low, wait until prices go up, sell them, and make a big profit. Right, it's mostly about analyzing risk and making calculated decisions. That's why investors use formulas, ratios, data, and analysis. They try to decide how much to invest, where to invest, and what they might gain. Some people say the stock market is like gambling. But it's not exactly gambling. You're not just depending on luck. You're using information and analysis to make smart decisions. Exactly. Sometimes you're not just trading small stocks, you're trading shares of huge companies, parts of entire industries, and even parts of national economies. For example, stockbrokers often manage retirement funds for workers. They might say, if you leave your money in the bank, you get 5% interest. Give me your money and I'll try to get you 25% return. So they are playing with very serious money, not just their own.
So, stockbrokers are not only risking their reputation, but also other people's life savings. That is a very serious responsibility. That's why about 2 years ago, many people lost a lot of money when the financial bubble burst. A bubble means prices go up very fast, but they are not real or stable. When the bubble bursts, prices suddenly fall. This happened in many areas, especially real estate. House prices went down, stock prices went down. The United States entered a recession, which means the economy became very weak. Because of this, many people lost their retirement funds, their savings, money they worked their whole lives for. So this shows us that we must be very careful with investing. You should always study carefully, understand the risks, and do your homework. And with that, that's all for today's lesson. English Pod Audio Review. Now let's review some of today's important vocabulary. You will listen to the meaning and then say the vocabulary word. Vocabulary review. A steep and rapid fall. Plunge. To contribute, especially in a discussion. Weigh in. Producing gain, benefit, or profit. Profitable. The amount of something that is produced or returned. Yield. To think in a new and creative way. Think outside the box. Let's try that faster. To contribute, especially in a discussion. Weigh in. Producing gain or profit. Profitable. To think in a new and creative way. Think outside the box. The amount of something produced. Yield. A steep and rapid fall. Plunge. Now say the word and hear it in a sentence. Plunge. The prices of houses in the United States took a huge plunge this month. The car went off the road and plunged into a deep valley. The value of our stock has taken a major plunge. Weigh in. Carol usually weighs in with good ideas during our meetings. Many factors weighed into our decision to fire you. If you weigh in all the pros and cons of buying a new TV, you will see that we don't really need it. Profitable. Their business is very profitable. I think we can be profitable if we reduce our operating costs. Real estate is one of the most profitable businesses in the world. Yield. The stock you currently own yields about 10% per year. I am very unhappy with the yield of these investments. The yield on your securities can be affected by inflation. Think outside the box. When you need to solve a problem, it's good to think outside the box. Some of the greatest inventions were created because inventors decided to think outside the box. Thinking outside the box can give you new and creative ideas
In
and a
today's
fresh
story, we
perspective
will
on
discover
problems.
5 powerful lessons about managing money. These are lessons you may not learn in school, but they are very important for financial success. As we follow Sam's journey, we will also learn new English words and see how to use them in sentences. This will help you practice English in a fun and simple way. So please stay with us until the end. The beginning of Sam's story. Once upon a time, in a busy little town, there lived a 27-year-old man named Sam. One afternoon, Sam was sitting by the side of the road, deep in thought. Even though he had worked hard for 5 years, his life had not improved much. Sam felt frustrated. He wondered if there was any way to escape poverty and finally become truly wealthy. As he walked down the street, he passed by a large, beautiful mansion. Something inside him pushed him to walk past the tall iron gate, even though he did not have permission. Sam did not know it yet, but this brave decision would soon teach him a life-changing lesson about money. Meeting Mr. Hayes. From a distance, Sam saw an elderly man sitting on a garden bench holding a cup of coffee. This man was Mr. Hayes, the owner of the mansion. He was very wealthy, but also humble, kind, and generous. Sam walked up to him and spoke politely. "I'm sorry for entering without permission, Mr. Hayes." Mr. Hayes was surprised, but he smiled kindly and welcomed Sam. He was curious to know why this young man had come. Sam sat down beside Mr. Hayes and began to explain. Sam's problem. "Sir," Sam said, "I have worked hard for 5 years and I earn a decent salary, but my life has not really changed. I don't waste money, but I still can't seem to get ahead. Do you have any advice on how someone like me could become wealthy? Mr. Hayes smiled warmly. Anyone can achieve wealth, Sam. Even you, he said. I will share 5 important principles about money. These are not usually taught in school. If you follow them carefully, you will be on the path to financial success. Sam leaned forward, listening carefully. Lesson 1. Spend less than you earn. The first rule, Mr. Hayes said, is to spend less than you earn. This is the foundation of all wealth. If you don't master this rule, you cannot move on to the other steps. For example, he continued, if you earn $5,000 a month, try to save at least $2,000. If you earned $3,000, save at least $1,000. Never allow your expenses to be more than your income. Avoid too many loans and avoid gambling. Even someone with a 6-figure salary can remain in debt without this rule. Sam nodded slowly, thinking deeply about what he heard. Lesson 2. Build an emergency fund. Mr. Hayes took a calm sip of his coffee and continued. The second rule is to have an emergency fund. Life is unpredictable. Your car may break down, your roof may leak, you could even lose your job. Without an emergency fund, you are forced to borrow money or sell your assets at a loss. This limits your choices and increases stress. Think of an emergency fund as a safety net. It protects you when unexpected problems happen. Sam nodded again, clearly understanding the importance of this advice. Lesson 3. Invest in yourself. Now let's move on to the third lesson, Mr. Hayes said. This lesson is about investing. Many people feel afraid of investing in stocks or businesses because they think they don't have enough knowledge. So for now, the best investment you can make is an investment in yourself. Sam looked curious. How can I invest in myself, sir? He asked. Mr. Hayes smiled and replied, look at your skills, improve them,
Whether
learn
your
new
skill
skills,
is
take
carpentry,
courses, read
plumbing, or
books,
customer service,
build knowledge
Mr.
that can
Hayes
help
said,
you earn
you
more in the
must
future.
invest in it. Invest your time, energy, and money to become better. Learn where your boss buys materials. Learn how to market your services more effectively. Use some of your savings to improve your skills. Attend courses. Buy better tools. Read useful books related to your work. Sam listened carefully. He now understood the value of these words. He looked at Mr. Hayes with new determination, wishing he had learned these lessons earlier in life. Lesson 4. Increase your income. Mr. Hayes continued with the fourth lesson. Now that you are building strong skills, he said, it is time to earn more money. Once you master your abilities, you may start your own business. When that happens, your income can grow. You will no longer be paid only by the hour. Instead, you will earn based on what you produce and the value you create. The more value you give, the more you can earn. The sky was growing darker, but Sam did not want to leave. He was eager to hear the final lesson. Lesson 5. Create passive income. Mr. Hayes looked at Sam and spoke calmly. And now, the fifth and final lesson, create passive income. When you follow the first 4 rules, you should have extra money left. Now it is time to let your money work for you instead of you working all the time for money. You can invest in property, start a rental business, buy a franchise, or research other passive income opportunities. Think carefully. Study your options. Choose wisely. Sam's decision. Mr. Hayes smiled gently and asked, "Well, Sam, are you ready to follow these lessons?" Sam replied with excitement, "I used to just go to work, save a little money, and hope that wealth would come to me someday. But now I understand that there is a real strategy to building wealth. Thank you, sir, for your invaluable guidance." Closing message. Today, we learned new English words and useful sentences through this story about money and financial wisdom. Remember, learning English can be fun when you practice regularly. So keep listening, keep learning, and keep growing. Don't forget to like, comment, and share how this story helps you improve your English. Thank you for watching, and I'll see you in the next story, where we will continue learning together. English Pod Review. Now listen to the meaning and then say the vocabulary word. Vocabulary review. Something that is usual or expected. Norm. The money that a country uses. Currency. The amount of money required to start or maintain a position. Margin deposit. Taking effect very quickly. Drastically. Very quickly, just a moment. Split second. An offer to pay a specific amount of money. Bid. Let's try that faster. The amount of money required to reinstate. Margin deposit. Something usual or expected. Norm. Very quickly, just a moment. Split second. An offer to pay a specific amount of money. Bid. Taking effect rapidly. Drastically. The money a country uses. Currency. Say the word and hear it in a sentence. Norm. What's the norm in this company when it comes to office rules?
Listen to the meaning of each word, then say the word out loud. 1. Norm, meaning something usual or expected. Examples. This is the norm, so you'd better get used to it. Delivery from McDonald's and street vendors are the norms around here. 2. Currency, meaning the money that a country uses. Examples. Before I went to France, I had to change some of my Canadian currency into euros. What's the currency in this country? My country's currency is worth almost nothing in USD. 3. Margin deposit, meaning the amount of money required to start or maintain a trading position. Examples. He decided to start with a margin deposit of GBP 100. I can't believe that I can trade with USD 1 million while only putting in a margin deposit of USD 10,000. One has to be careful with trading using a margin deposit because the risk of losing more money than you have is high. 4. Split second, meaning very quickly, in just a moment. Examples. The gang members were closing in on me, so I made a split-second decision to run instead of fight. My heart pounded as I made a split-second decision and grabbed her hand. My split-second decision to try a trick on my bicycle to impress my friends didn't end well. 5. Bid, meaning an offer to pay a particular amount of money. Examples. The current bid asked for Euro/USD is 1.3998 to 79. I bought euros at an ask of 1.4235 and sold British pounds at a bid of 1,501. The bid for Japanese yen and ask for Hong Kong dollars are really good right now. Tip for practice. Listen to the word, say it out loud, and then try to use it in your own sentence. Repeat each word 3 to 5 times to remember it better.